So yeah, there is a tremendous amount of demand right now by global investors who are looking for alternatives basically to US dollar, US treasuries, and US assets. And they are looking at Europe. Europe is the second largest economy from that standpoint, the second largest financial market. They look at the bond market and they see a bond market that is very fragmented. It's fragmented, you know, the size of the bond market is just 4 trillion euros, it's small. And they are demanding Eurobonds. They are demanding a safe asset that they can buy in size and that they can hold as an alternative to US treasuries.
What kind of Eurobonds do you envision? Is it like a flat-out Eurobond so that we need to have a European finance ministry, or what concept do you think is viable?
We don't need to get there. We already have Eurobonds. In fact, you know, the EU bonds that are issued by the European Union, which are used to finance the next generation EU. And these are bonds that are issued by the EU as a legal entity, and they are backed by the revenues that are transferred by each of the member states to the EU budget. So one possibility that we have in mind is scaling that up. So generating up to 25% of European GDP in Eurobonds that would be backed by explicit transfers of revenues from each of the member states to that EU entity to just service the debt. And it doesn't have to be very big. To service 25% of GDP of Eurobonds, all you need is around 1% of GDP of revenues. It's not much.
Have you been speaking to Brussels or to people who might actually be influential enough to implement that?
So we've been speaking with a lot of the main stakeholders. As you have seen, for example, the ECB is now supporting the idea of the international role of the euro, and one of the elements of the international role of the euro is enhancing the supply of safe assets. So that's a conversation we've been having. We've been talking to some of the governments, we've been talking to the Commission, academics. There is a conversation going on. I'll say one thing, we haven't got any no yet, which is good news.
Well, that's good news. Let me bring you back to that overall topic that investors do want to have an alternative to the US. Is there enough concern, or is there concern that the debt market is actually not stable?
Well, I think there are several issues, right? We are undergoing a major transformation in the global economic order and in the global rules, right? Until now, we were playing by the rules of the post-Bretton Woods world, and now those rules are changing. You know, we are in the middle of a massive overhaul of trade relationships, and I think what investors are thinking is that they need to diversify. So there used to be that US Treasuries was the one asset you needed to be safe, and that was it. Now they are considering maybe I need other options as well. And that is what is happening. Global investors are just reacting to the many policy changes that we are witnessing.
It's interesting that global investors do think Europe, again, is an attractive place to be, because for so many years they were just talking about Europe as like this anemic growth situation. And why do you think it has changed
I'll tell you one thing. Back in 2010, we were discussing before about the euro crisis, right? A lot of the countries had large current account deficits. Now they have current account surpluses. There are no imbalances. Europe has shown that it has a stable set of rules and rule of law and fiscal policy frameworks and everything else. The fiscal policy outlook, it's okay, yes. Some of the countries have higher debt than others, but everybody has a plan to reduce debt and deficits. The ECB has improved its policy framework. You know, it's been doing QE. We learned yesterday that they are keeping all the tools in the arsenal. They have the TPI framework. The spreads have basically narrowed to numbers that are just not material from a macro standpoint. So it's a much more robust economy and a much more robust policy framework. It's the lowest unemployment rate since the euro was created. So there are good things happening.